So I'm reporting to you now from my little grass shack in Kauai, and it is beautiful out today. I'll give you a quick look, and this is the view from the room here. So this is not too bad, not too bad. Sorry you're not here. Wish you were. We could have a good time together here in Kauai. All right, let's jump into the financial information here on this Sunday night. First of all, this is Randy Kirk. You know all that, and you want to like this if you like it on Sunday night, where I report what to expect this coming week. And then if you could subscribe and you could hit notify. I'm going to try to lay out a lot of the shows for the next week so you can see what's coming up, and Patreon, of course. All right, let's move into it. Trueflation is showing a huge drop over the last 30 days in the inflation rate. Now, Trueflation is not an official government thing. It's not, it's just somebody's index. They go to a lot of trouble to try to get it right. What they're showing is that housing costs are down. They're showing transportation costs are down dramatically. They're showing health is down. They're showing food and beverages are down. These are all down month over month. And the result is that the overall inflation rate that they've been showing at around 4% year over year is now dropped to 3% year over year. Now, that would be extremely good news if the government comes along and agrees with that, but that's not going to happen until Friday. We'll find out on Friday, but we'll talk about that in a minute. All right. At the same, now, everything else, by the way, everything else on the Trueflation list was up, and a couple of them fairly strongly, but the overall picture was down from 4% to 3%. That's really, really good. All right. I'm also having a lot of trouble finding the recession. I mean, I'm really digging for it. I spent here on my vacation. I just spent the last hour trying to find some evidence of a coming recession. Everybody says it's coming. Everybody says it's obvious. Most people are saying it'll be really shallow. So therefore, that means I don't see how you could say obvious and shallow at the same time, because if you miss by a little, then there's no recession at all. So I'm still trying to find it. One of my leading indicators is trucking. If you follow this channel, I try to look at the trucking tonnage and whatnot. For some reason, the final numbers, which normally would be in by now, are not in by now. So hopefully I'll get those tomorrow or the next day. And by Wednesday night, when we do our financial midweek show, I'll have the trucking numbers for you. However, there were some trucking numbers that I was able to get. And that number one, while we saw trucking overall, the tonnage down in March, and we don't have the April numbers yet, but trucking rates are down. And so that could mean that there's less trucking happening out there. I don't know. So in general, kind of a few things that I saw suggested that trucking wasn't down. So we'll have to wait on that one. We know that the job situation is still really strong. So I'm really hard pressed to find where this recession is going to come from. I'm trying to find a leading indicator that shows that it's clear. Nothing. I can't find anything. So last week, the retail results out of Home Depot were a little off. Target was okay. Walmart was up. Their guidance was good. So there wasn't like a strong indicator that retail was in trouble. Tech reporting was stronger than expected, which might be why the overall S&P has been trending higher for the last couple of weeks. Now, normally they say, go away in May. We'll see. That usually happens towards the end of May because the summer tends to be a lot of doldrums. A lot of folks that are, playing the market go on vacation like this, and they're not paying as close of attention. So a lot of times in the summer, we do see some doldrums. Yeah, I'm thinking that it's going to be kind of so-so. As you know, I think August or September, we start the new bull. Whether we'll have some upswings or downswings over the next 60, 90 days, your guess is as good as mine. And of course, the bull market might not start until October or November, but there will be another bull. We know this. There's like no chance there's not going to be another bull, unless there's some catastrophe. And of course, you can never count those into the story. All right. So coming up this week, we got lots of Fed talk on Monday. All kinds of people from the Fed, the president's going out and giving talks on Monday. I don't expect much to come out of those talks. Chairman Powell set the tone on Friday when he said basically he doesn't see any strong clear reasons that they'll have to raise rates as much as they thought. I reported on that on Friday. So I don't know. I don't think that we'll see a lot of Fed talk this week that's going to move the market. That's just my guess. We will have probably a decision on the Fed ceiling. I think that the president's getting together with I'm sorry, I'm blowing it right now. He's getting together with the head of the Republican side, and they should hopefully hammer out something this week. I'm thinking by Wednesday or Thursday, we'll probably get a sugar high from that. If there's a final decision on that, we'll probably get a sugar high, but I don't think it'll really affect markets long term. That will just be, some risk coming off the market, which will allow the market to go higher, but it doesn't affect fundamentals. Purchasing managers flash numbers will be on Tuesday. Now, this is a good leading indicator. So if we see that the flash indicator suggests that purchasing managers are pulling back, even more than they have been in previous months, that would be a leading indicator to pay attention to. Home sales on Thursday, they're going to go down. They're going to be lower. In my opinion, the street also thinks they'll be lower. Why are they going to be lower? Well, because there's no inventory. It has nothing to do with the demand. There's lots of people looking to buy a house. They are not being cowed by the interest rates. They're out there and there's nothing to buy. So that's what I expect to see from the home sales on Tuesday. Fed minutes will be released on Wednesday. The Fed minutes rarely have something in them that we didn't already know was going to be in them. And in this case, I would be shocked if there was anything in the Fed minutes that would move the market. Then there'll be all the good stuff. The big day is going to be Friday. If we can make it through to Friday without any drama in the overall market, in the macro, then Friday could produce all kinds of drama all by itself. So of all the big things that are going to happen on Friday, the number one will be the PCE. This is the Fed's favorite inflation guide. The street expects the core CPE to still be at 4.6, which it was last month. I think, based on Truflation's number, I think maybe we see this go a little lower. If it went down to 4.2, 4.1, if it dropped below 4, the market will go crazy, okay? If it stays at 4.6 or goes to 4.7 or 4.5, if it stays in that range, I think the market will respond mildly. But this is obvious, right? You don't need me to tell you that. But what I will tell you is I think it's going to be trending better than expected. Personal income will be reported, and the street expects 3%. Most people believe that the Fed is happy at 3%. I know inflation needs to be at 2%, and I don't know this for a fact, just from a lot of reading I've done recently, that the Fed is happy if personal income is going up 3% year over year, and that's what the street is expecting. If it goes down much below 3%, the market might see that as some evidence that the overall job market is not as strong as it looks like it is. And it might just be that employees are not able to ask for as much additional income as they have in the past. So we'll see what happens there. The trade balance numbers come in on Friday as well. That used to be a big number. Everybody paid a lot of attention to the trade balance. The street didn't even have an expectation on this. So for some reason, the trade balances have reduced in importance compared to what it has been in the past, while all of these other things are showing themselves as being important. The stock market, as of Sunday afternoon, as the time I'm reporting this, the futures are looking like they're just a little bit off. That's probably because of the whole debt ceiling issue. Oil is very close to even, still trading in the 71 range, which is fine. That's probably why transportation costs are showing down in the Truflation index and why we could see good news in the CPE. I'm sorry, the PCE. There's so many three-letter words. Okay, and then the bond rates right now are also, the 2-year and the 10-year are down pretty nicely in the Sunday afternoon, but the 2-month is up sharply, giving us an even broader inversion rate, which is kind of striking on a Sunday afternoon without much trading. So we'll see what happens tomorrow, whether that's a trend or whether that was just a momentary problem. And of course, there's still all this uncertainty with the debt ceiling that's probably impacting that as well. All right, let's talk about Tesla. For those of you who listened to Saturday morning's video, I'm kind of be repeating a little bit of what I said on Saturday morning, but those who did watch it were hugely enthusiastic. If you haven't seen it yet and you'd like to see more detail about what I'm going to say, go back and watch that Saturday morning video. It got a very enthusiastic response. So let me tell you what I'm thinking right here. All right. There's a sentiment shift taking place. There's a sentiment shift, I think, taking place in the overall market, but we may not see that play out until after summer. That's kind of where I am in the macro. But the sentiment shift in Tesla could play out now. We know the stock is beaten down. Now, you can't think about it in terms of from the all-time high. That was a enthusiasm high based on a story stock in an environment where risk on was 100% out there. That was a crazy high. You can't say, oh, it's down 50% from its high. Makes no sense at all. Now, was it an okay price? Was there value there? Was that reasonable? Yeah, it might have been reasonable, but it was way up at the top of reasonableness. So stock is 50% from that high now, but what we really want to look at is where is it from what might have been more reasonable at the time, and it's still down, and the company is much stronger, way more earnings, way more potential earnings, a track record of execution like no other company maybe in history. And so the stock right now is way undervalued. Now, I'm not a stock analyst. I'm not, take this advice and figure out for yourself what you want to do, because you can't take my word on any of this. All right. This is my analysis based on years of following the stock market. All right. So the stock story that got us to 360 after the split, the stock story got some nails pounded into it, got some pieces chopped out of it by the whole Twitter thing, by the demand problem, the theoretical demand problem, by the missed numbers, by some of the things Elon was saying, all those kind of things that were just like chinks in the armor, and drove it all the way down to 100, which was nuts. If you bought some at 100, congratulations. Even if you bought it at 120, congratulations. I think we are currently seeing the lows. I don't think we're going to see these lows. We're not going to see these numbers ever again. Oh, could we have a 5-point dip? You know what I'm saying? These are the lows. We're in the low range right now, and we could really be looking towards going past 200 shortly. And the reason for that is because the things that caused those chinks in the armor, those things are no longer in play. All of them are now off the table. The people are starting to believe that Tesla will be able to sell 2+ million cars this year. The people are beginning to believe that Twitter is fine and we don't have to worry about Twitter anymore. The people are beginning to believe that maybe even Elon Musk has seen a little bit of how he may need to pull back just a tad on the things that he says and maybe think about them. And he's even promised that he'll no longer tweet after 3 a.m. So we have some really kind of cool things happen. Oh, yeah. And he's not leaving Tesla. He's just going to stay on as Techno King. So all of these things are taking away the risk. All these things are taking away uncertainties. When you take away risk and uncertainty, what do you have to look for? You go back and you look at the fundamentals of the product. The fundamentals of Tesla are the strongest of any company in history, in my opinion. The potential for Tesla, when you throw in what the opportunities in energy storage, robotaxi, and especially Optimus, make this a crazy, crazy opportunity for those who are willing to wait a year or two. So is this the time? Is this the time that the narrative is back on? Is this the time, even in a risk-off market, could some of the cash on the sidelines, because there's a massive cash on the sidelines, because some of the cash on the sidelines come off and start taking nibbles at Tesla. And then what happens is the momentum of that, what we've seen in the last 2 weeks with Tesla being ahead of the market, doing better than the market for almost 2 weeks in a row now, all of a sudden that momentum gets a life of its own and people start to pile on because of FOMO. You don't want to miss out on the biggest opportunity of this century, or maybe even last century. And so that may be what we start seeing. Now, for those of you who are paying very close attention, the YouTube videos of full self-driving are showing full self-driving to be getting really, really good. Saw one this morning where somebody had a 30-minute drive, took their family member along with them who was totally negative, saw a 30-minute drive with no interventions and was impressed as heck. This is where we need to be. We need to be in a situation where not only is it safe, I think there's an indication a lot of people who are doing this testing all the time and are doing the analysis all the time, the third parties that are out there, they can be enthusiasts like me and maybe like you, but they're trying to do honest reporting and they're saying, hey, you know what? The safety interventions are down to almost nothing. What FSD now needs is for it to be comfortable and for the passengers in the car to go, oh, this is fine, no problem. I was flying out here to Hawaii over the weekend, and the fellow sitting next to me said, you know, it's kind of hard to think about, you know, having the car just drive itself and you're just sitting there. And I said, well, that's what you're doing right now in this plane. I assure you, the pilot hasn't done anything. Maybe even since before takeoff, they even take off and land themselves. So anyway, that could be a real shift again. The sentiment could really shift on robotaxi if even the YouTube videos start to show that it's getting very, very close to going over the top in terms of full self-driving. So I'm saying we've seen the lows. I think we'll be going over 200. If we break through 217, sorry, I can't speak. It's going to be crazy if it breaks through 217. That's a number, you know, I'm not a technical analyst by a long shot, but if you look at the charts, you'll see that 217 is a magic number. All right, so that's what I got for you on this Sunday afternoon. I hope you've had a great week. Look forward to talking to you tomorrow morning, where I'll be talking about the news over the weekend that you might have missed. Look for that tomorrow morning, first thing. And until then, it's been great talking to you.